How can a CPA assist in structuring real estate investments?
Um, the starting or how the journey starts with the selection of the entity type. Many times there is this belief that because you have a business, an active business that is separate from real estate, you can use an LLC for an active business. No, we always advise our clients to choose very carefully the type of entity. For LLC, any type of real estate investment, long-term investment or short-term investment in real estate, except for flipping. When you buy a property, you improve it and then you sell it. That's called flipping. Except for flipping, limited liability companies are the entity of choosing. For anything else, is an S corporation for U.S. citizens. So S corporations are only for U.S. citizens. If you have a rental activity, long-term or short-term, it's a limited liability company, that's for sure. But the limited liability company needs at least to have two individuals within the company to use or to benefit from the limited liability responsibility that this type of structure provides. For any non-real estate business, it's not a good idea to put or to use an LLC because it will create an additional layer of taxation that is called self-employment tax. Instead, you should use an S corporation, but only if you are a U.S. citizen or U.S. resident. That will be the first step in the journey of real estate. Once you have that covered, for example, you are a U.S. real estate investor, but you do flippings. You buy houses, you improve them, fix them, and you sell them. That is not, the IRS does not consider that as a long-term activity. So you should not use an LLC because that will be active business. You will have, if you use an LLC for that, you will get 15% additional taxation. So do not use an LLC for that. Use an S corporation if you are a U.S. citizen. If you are a foreign citizen, use a corporation. These are the things that the CPA knows and does for their clients, giving them guidance about the selection of the entity when they are starting the journey. Once you have including that the LLC, if you are using the LLC to invest in real estate, you have to have two people in the LLC. Otherwise, the courts and the IRS will not consider your LLC as a separate entity, and it will be disregarded. So, better to have that from the beginning. This is the starting of the journey. Once you have that covered, the next will be how you structure your or how you organize your expenses. What is the method that you use to organize your expenses and the income and provide at least a profit and loss in a quarterly basis? That will be the second step to make sure that all the deductions and all the reduction to the income kind of expenses are being taken, and you have a clear picture of your investment. At the same time, the LLC, or as a third step, the CPA will be able to provide you with a set of financial statement and also advice. As I said before, we have clients who called us in regards to depreciation, in regards to a 1031 exchange, in regards to long-term capital gains, and we advise to our clients regarding these specific topics when they call. So that will be the third step, the consulting side that only an expert in a CPA expert in real estate will be able to provide. And finally, it is the peace of mind that you have when there is a professional at your side that is covering all these bases, and at the end of the year you get a home run because you have no worries and nothing to worry about the activity because the CPA is doing it for you.